Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about why the Batman trade exists, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
Let me tell you why I developed the Batman and what the real difference is between trading with a single out-of-the-money fly versus a Batman. The reason why I added the Batman, at first we just did out-of-the-money flies. That's the way we rolled. And when we first started this service, there were only 3 weekly expirations. So if there are only 3 weekly expirations, and then over the course of, say, 200 trades, you could have, let's say, 7 or 8 losers in a row, you do the math. That means that you could go 2.5, maybe even 3 weeks, depending on when the losing streak started, 3 weeks of just losing. Now, from a time point of view, a length of time point of view, that seems arduous. But from an actual loss point of view, it's very manageable because drawdowns, because of the small risk to reward, never really exceeded about 3.25–4% of my total capital. That is super small. That is super small, right? A 4% drawdown? Are you kidding me? That is what you're after. You're after those tiny, tiny little drawdowns. That helps you stay in the game and keep your mind straight. So even if I have this extended losing streak, it's not a big deal. I can keep it together. I don't go on tilt. I'm composed. No problem. Just keep on doing what we're doing and keep your mind straight. Follow through with your process. Do the same thing over and over again, and then you're going to come out on top because it's all going to average out. You're going to still get that 50-50. Even if you go down to 40%, you're still winning. Now, since that time, we've gone to 5 expirations per week. But back then, new people would come in and they say, we just had this awful streak. It's just driving me nuts. How do you handle this mentally? And it's one thing to handle 7 losers in a row, even if they're small, but it's another to have 7 losers in a row that are over a large span of time. So I figured, okay, we can fix that problem by doubling up on our trades, making them more market agnostic. So you can put one above the market, one below the market. Now that changes the whole dynamics. And for that 3 expirations a week, that helped quite a bit because now there was a much better chance that you weren't going to have 7 losers in a row. That gets diminished dramatically. Now your win rate still stays around 50%. And the reason for that is that there's a distance in between the trades, between the 2 flies, that price could just stay there, premium will decay, where it's just a losing trade because there are some days where the market just doesn't move, right? If those 2 trades are far enough apart and never reaches one or the other trade, then you're going to end up with a loss. So it's not a binary. Either you win here or you win there. It just doesn't work that way. There's still a good portion of trades in the middle that don't win. Plus, you have to take into account your fallibility as a trader. Even the best traders are fallible, and you don't win every trade. So the Batman at least solves that streak problem. There is a caveat to that. There's always a caveat. Whenever you try to fix a problem, it's like whack-a-mole. You whack this one and another one comes up. You whack that one and another one comes up over here. Well, the Batman's no different. And it has benefits. One is you've solved the streak problem. You've also created a better distribution of returns, or what would appear to be a potentially better distribution of returns, because now you're going to have more potential pinned trades. Those are trades that get right inside the profit tent that make a lot of money. That will create another distribution that will not just be a long tail, but a long fat tail on your distribution curve. So those are really good things. But the real big problem though is, let's say that this is a butterfly and then this is my debit, right? See, it's this thick. I got a big fat thumb here. And then this is my butterfly. So that debit right there, say, is $100 to maybe $1,000 for the potential profit. Now, let's say I have 2 of these. Well, they don't just go like this. You have to add the debits. Now that you have twice the debit. You see the problem? Now, twice the debit, a little bit less total profit. Your risk to reward is completely different now. It's almost cut in half. So you need to do some mathematical gymnastics there and start resorting to some more risk management. Now, let me just be honest with you. When we put a trade on like this, I don't manage that risk. I don't manage that one. But when I get like this, I do want to manage that. I want to get out of that trade if I get down to 50% loss. So that's an extra step that we have to do in this trade. It's a little extra. But darn it, I still have not answered when we put the Batman on and when we put the out of the money fly. All right, are you ready for this? I'm up close. I'm going to tell you. I flip a coin. I flip a coin. I do. I flip a coin because it doesn't matter.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.